You already know, and once again, we are back with them Hollywood trades on Ethereum this time. Once again, everything came to pass. We did get down into the weekly low as we were expecting. Once again, as I always say, price action is pretty easy when you know what you're looking at. It's a matter of factly easy when you know what you're looking at. So there's only one or two things the price can usually do from any given uh, situation. So now we're on a new situation. Now we have stop hunted the low of the highest weekly candle and the bullish impulse high volume daily candle. We were expecting that. We were also expecting it to actually hit the middle of this. We have done that. We have actually swept that whole block. So now we are fully reset. Basically, all of the orders in the PD or in the range, the individualized range that we have from this low to this high has been cleared. We made the impulse up, swept it, came back down. As we know, the CRT function would have led us to this low before hitting this high because we were stuck within this candle's mother range. That's just an easily observable candle mechanic. Anyway, we are in a new part of this range now, kind of consolidated. Identifying your range is probably 50% of your battle. Identifying what it's going to do within that range is the other 50% of the battle. And so now here we are. We have broke the mother candle's range with another imbalance candle. And so a high volume candle, let's go ahead and look at the format of the wave. We are still bullish average volume, but we are taking a deep retracement below the midline of the average force of direction. What we will look at also is how much volume is in that candle. Yes, that candle did break the range with a high volume candle. It looks like there's a pretty good interval to expect high volume situations. It's a pretty decent interval. It's not perfect, but every few days you can expect a high volume situation. And we were expecting this high volume situation. The volume settled, as you see, the average volume settled till it was ready for a move, and a settlement kind of led us into understanding once we got this bearish imbalance here and we kind of close below this body. Anything above the of these levels here, as long as we close right, break and retest or rejection in the bar method, once you close beyond levels, which was this group of levels here, those levels should become resistance. What do we see? We see price go up into those levels, and then that's your rejection from these levels here. So we broke those levels and then retested those levels and continued down. After that, now we exist. I would love to keep this mother candle shaded, but that's just too much on the chart for me. It's too much chart overload. And so pretty much this still is valid after a certain point, but once this became invalidated after we closed below this candle's body, this became invalidated. What you get next is, I dropped my mouse, spazzing. What you get now is this candle, either one of these candles. You can use the highest candle here, and you will say this level would have been the first level. This is where I would have said that this candle would lead us to. And so now that that's satisfied, until we get, this candle got closed under as well, which could have given us a new target right here of this level. But anyway, we exist now within the wick of this mother ranges candle. That is our consolidation range, is between this low, this close, and this low, right? And so we're expecting it, right? You always expect it to keep charging the lows of bearish candles inside of bearish ranges. That's just it's just classic candle mechanics. All of this new age stuff, you can kind of, get with the imbalances. You can get with the CRT, right? Right. This is CRT. You can get with the CRT. But all of it is just basic candle mechanics, mechanical observations, right? You get a bullish candle, the high of that bullish candle should be easily hit. Get another bullish candle, the highs of these candles should be easily hit. Another bullish candle, hit. Another bullish candle, hit. On the next candle, bearish candle, then, right? So you hit, bearish candle, then you expect the low to get hit, low to get hit, low to get hit. Boom, low to get hit. Then, right, this is the bearish candle. The low gets hit, and then the high gets hit, rebounded. And you just repeat the process until, that you just keep repeating that same process until the pattern is interrupted. That's pretty much how it works. It's, either way. So we expect the low of this candle to get hit. These are algorithmic levels, the halfway mark, the 25% mark. As we see the body exchange between these two candles happen at that level. This is another algorithmic level as well. So we're basically just tinkering around inside this space. There would be no trading inside this space as far as I'm concerned until we hit this low. That's where most of your liquidity is going to be at. Or you would hit this high, hit some of this imbalance, if not all of it, or maybe even hit this and then go down. But we're going down right now, so that's just pretty much, we're expecting it to sweep this low or close over this low, and then we continue on from there. If you do want to trade, you would have to trade short. If you go to your 30-minute time frames, you pretty much already have that narrative happening. Once this candle got closed under, you basically received your entry to start attacking this low, and this low already happened, and this low as well. You basically received, then you only have one more low after this low. So if we keep going down, we only have one more level. There's no reason to scan anything else to try to guesstimate any other levels or do any calculations. There's no reason. It's already here, and here. So that's pretty much that. If anything, if we do keep charging lower, we do have the option to fully rebalance this and come into this block for a mitigation of any orders that may be trapped in this higher time frame macro. We can reference this up against Bitcoin. We might as well just do a Bitcoin as well with the Ethereum, as Bitcoin is the big player. Ethereum is still not have the market cap that Bitcoin has. So this is the chart that you would pretty much use as your confluence or one of your main charts. Obviously, crypto pros know that. We did accomplish this CRT, so I'm going to delete that too much on my chart. Pretty much with all of this being said, we already see what's happening. There's no reason to expect anything other than this weekly low to be hit. Pretty much, once you have a bearish, you can change this from a level you will be looking at to an actual target. Once you start getting bearish closes in that direction, this is what we would expect this to be hit. That is also a candle range theory short idea. And so, boom, right? Balanced price range entry, right? You enter short, and CRT candle range theory exit, which would be here for this trade idea. Had to take a deep breath and pour one out for the homies that don't understand this. This is just pretty much basics. I do not expect this candle to be traded under or closed under, because we have closed above this candle and with a slight imbalance as well. So observing the imbalance correction, then you hit the mean threshold of this block, right, which is the middle. And so once we interact with this and this low, that should act as a take profit. We should be good to see a long back to the high of this range at some point. Maybe using this candle as a CRT long entry. If we wick it, wick this, wick that, TPs, long pairing of high volume order flow, millionaire, billionaire order flow for longs. Once the shorts take place, because a lot of people are going to think we're going short now, boom, you get the order pairing, you get the idea back to at least this high. I would never forecast the all-time high until we close over this high. That's just how break and retest should work. It's what you should expect in any situation. Going from level to level, candle to candle is how you, I've seen the videos. Anyway, we are going to go ahead and just call it a wrap. I mean, we can just dial into this infinitely if you really want to get into it. I mean, we could be here for the next 45 minutes looking at all these different time frames and this and that and the other thing. But pretty much the whole idea stands. Right? Let's just look at one more interaction because it's pretty cool and pretty neat. You get your balanced price range entry there for people who were short. That is where you would have entered. It would have been above this high right here, right? We broke this candle's low. You break it, you close beyond it, and then you retest it, right? Boom, boom, break and retest. That's how you find break and retest levels. Simple as that. And then you continue to your easy take profit here, and anything else that might have been over here below that, which would have been this candle's low, and now potentially this candle's low, these candle lows. There's no reason to manufacture zones and levels when you have literal particular levels that you can just look at. That's pretty much that. There is an imbalance here, so we could possibly say that we need to clear. I love to see entire ranges balanced. So I'm glad we did go down to this time frame. But like I said, you can just keep it to 4 hours as far as I like to go. You can just keep dialing in. We could dial into the hour time frame. We can dial into the 15-minute time frame, and then so on and so forth. However, this is pretty much giving us our basic liquidity expectation for the range. There are infinite things that I could always point out about a lot of these interactions, like the fact that it hit this here and then, right, kind of wobbled up and down, body levels here, and then you repeat the mechanics, right? Highest candle level here, closed underneath it. All of these levels become supply levels. That is supply. Supply is very specific. It's not these zones that people draw. Oh, it just keeps hitting like this. No, it's actual candle levels in the moment. That's why people fail to understand real trading. You can have analysis, right? Analysis is a general thing. You can pretty much be on point with analysis. That's why people say, "Oh, my analysis is right, but I got stopped out." Yeah, because you don't understand the moment to moment candle shifts. You need those to be a trader. You can be a premier 1% analyst and still never have precise entries. And if you do have good analysis as an analyst, you have to set your stop loss a million miles away to really get a lot of the benefit of your analysis. But when you use these particular candle levels, you can really do some crazy things when trading. But that's it for right now. We're 15 minutes in. That's all I have. We will come back. I just wanted to cover a lot of these updates that are happening as things are happening live, so people don't think anything I have to say is hindsight. That's a terrible way to go out as a trader, especially when your levels are so beautiful as these. So beautiful. A little bouncing around. And your Reaper, again, I did not mark anything else. I did not mark the imbalance. I did not mark anything else except this Reaper in this range here because we are stuck between that IFVG Reaper and the bullish imbalance below right here. I want to see this whole imbalance cleared. It's, it's pretty much needs to just clear below this low, hit this order block mean threshold, which is the middle of this order block. That's just what I'm expecting as of right now because we keep going lower. So it has to be for the imbalances and for the lows.